Hello, this is Jordan. This video is being recorded on the late evening of Monday, January 16th, 2023. Thank you so much for joining me in this video. Make sure you subscribe if you already haven't. Like I said in the last video, there's no ads on this channel or no ads in the videos, so you can skip around and watch them easily without being interrupted. So I'm going to talk a little bit in this video about this new gold analog chart that I published today. You can see it in the editorial. I was working on that late Sunday night. And also just talk about gold's technicals. Okay, so here's the bull analog chart. So we're looking at historically some of the best moves in gold. This is just looking at the first 2 years. You can see at the very bottom, that's the legend. This is all weekly data. The black is the current move, which started, and again, everything's on the scale of the current move, which started October 24th. That was the low, I think 1644 in, again, weekly terms. This is weekly data. And, one other thing is the dots there, the dotted line, that's an average of, I think, what could be 4 comparable rebounds to what might be ahead. And that's the rebound after 1976, 2004, because remember that the 2004 rebound led to that huge move in 2005, that huge breakout. And then the rebounds that followed 2018 and 2008. And so far, I mean, look, we're only 4 months into it, but so far we're following the dotted line. We're a little bit above it. But, there's not a whole lot more we can say about where we are now. We'll have to see. It depends on, how gold's going to make its first peak. Is it going to bullish consolidate? Is it going to correct a lot? And then we can have a better indication of, does this look like it's going to be a strong, eventually a breakout sooner rather than later, and it's going to, in other words, it's going to keep following the dotted line there, or if it kind of fails to break out, it's weaker, and for whatever reason, it kind of falls back to, where most of the lines are. You look at those, I don't know, those other 5 lines at the bottom, that would, just looking at the trajectory of those, that wouldn't project a breakout until 2024. But, I mean, you would, in some cases, you'd see a bullish consolidation anyway. But I'm getting ahead of myself. But this is what we have, and this is something that will definitely update over the weeks and months ahead. Now, getting into the weekly chart for gold, obviously, this rebound has gone much further than I thought. I thought it was going to peter out at 1835, 1840. Okay, then maybe 1860, 1865, that level. But, at times I tend to be too conservative. So gold closed last week at 1922. Let's round up, taking out the resistance at 1900. I mean, if there's any bit of follow through here, it might be able to get up to the next level, approach the next level, which is, I think on the weekly chart here, we're looking at 1970 or so. On the monthly chart, 1950 is really significant resistance. So that's also a level where gold could peak. Obviously, I'd love to see it reach 2000. That's also weekly resistance. But this is getting really interesting, this move. And, I can't say a lot more until we know if this is going to peak at, 1950 or 1975 or 2000, how it's going to peak, at what time of the month. So what will the monthly chart look like in addition to the weekly chart? I'm concerned about all those things. But, obviously this has been a great rebound so far. The other thing I'd mention, look at the moving averages there. I mean, this is a weekly chart, but we have the equivalent of the 200-day and the 400-day, and then also one of my favorites, the 40-month moving average. And so the 40-month moving, I mean, if you look at all these moving averages, so the 40-month is a little bit below the others, but, the 200 and the 400-day, okay, these are basically around 1,800 right now. The 40-month is a little bit below that, so I drew the circle there. And, typically, and I wrote about this today in my editorial at TheDailyGold.com, and typically in a real gold bull move, you just don't see that many huge pullbacks. I mean, we really only saw them following that 2008 low, gold, rallied from 700 to 1,000. Then it had a 15% correction. I mean, that's that's probably the worst correction that I could find. Looking at the early phases of all these, of all those moves at the bottom, when you look at those years there. So what does that mean for gold as far as where we are now? So even if gold rallies up to 1950 or even 2000, I mean, if it were able to reach 2000, a 10% pullback would bring it to 1800, where that support is. I mean, if it peters out at 1950, or if 1922 is the peak, or 1925, I'm looking at the chart now, or the date at the top, then, in my opinion, then you might get a not as much of a pullback, because I think 1800 is probably going to hold. Now, all these, all this analysis, and looking at the analog chart again, everything is based on the presumption that we're in a real bull market for gold. If gold deviates from these historical corrections, I mean, if it deviates significantly, then that's a sign that, we're not in a bull market. The bull market hasn't started yet. And in that case, there's something really fundamentally wrong. Like, there would be a real fundamental reason for that to happen. And I just don't see any fundamental reason. I think the market is sensing that the Fed is probably going to be done at the next meeting. Even if it's one more after that, the market knows the Fed is going to be done. Gold has been sniffing this out. We know that there's a recession coming. The question is, how severe? Even if it's not that severe, the Fed will still cut rates. So real interest rates are going to move higher. And obviously with a recession coming, that's going to drive a lot of generalist money into gold and precious metals. And so, even if the stock market, I mean, there's some people who think it could hit 43 or 4,400 before there's a recession. Even if that happens and a recession hits, you'll see the stock market really come off when the recession hits and, profits decline and all of that. And, then the Fed's cutting rates and money moves into gold. So I'm going into a whole nother video here. I'm sorry. But the point is, I'll give you another look. Here's the bull analog. Here's where we are right now. You know what it looks like. And here we can see the weekly chart. It's been a great rally, but we're coming up to a lot of significant resistance. And I don't think we're going to have that big of a pullback there. That's the gist of the video right there. Enough for me. Let me know what you think in the comments. And thank you so much for tuning in. I'll see you guys in the next video.